Happy Monday, everybody. Welcome back to the Average Joe Investor channel. In today's video, we're talking about dividend stocks going ex-dividend this week between the 27th and March 1st. And anytime we're talking about dividend stocks going ex-dividend, we're talking about potential dividend espresso trades, aka triple income opportunities. There are a total of 50 dividend stocks going ex-dividend this week. I've narrowed that list of 50 down to 20, and we're gonna highlight 4 particular opportunities. And you have the potential for up to a 108% annualized return. Okay, so first off, we're talking about dividend espresso trades. And before we can talk about that type of strategy, we need to understand what it is. What we're looking to do is capture income or cash flow from 3 different methods. Number 1, from the dividend. We want to own the stock prior to the ex-dividend date in order to be eligible for the dividend. That's the first level of income. Second level is by selling a covered call as soon as we own the dividend stock. That's option premium. That's level 2. Level 3 here is if we can sell the stock for more than we purchased it from. Capital appreciation. That is the dividend espresso method and strategy. Okay, so now that we understand the dividend espresso strategy, aka short-term trades to generate cash flow, let's dive into our list here. There are 50 dividend stocks going ex-dividend this week, but that doesn't mean they're all a good fit for many different reasons. First issue could be the fact that the price is just too high. For example, way down here, EQIX has a price per share of $888.28, which means you need that number times 100 or $88,000 to put on a dividend espresso trade because you need to sell that covered call. Not a good fit for the average Joe investor. So we're going to specifically look at dividend stocks with reasonable price per shares. We also want to look at dividend stocks that have a weekly option frequency. It makes it a little bit more difficult to make this a short-term trade when you're looking at monthly option frequencies. So I've narrowed this list from 50 down to 20. Here are the 20 dividend stocks. We've got Lockheed Martin, Goldman Sachs, McDonald's, Union Pacific, Honeywell, CBOE Global Markets, Pepsi, Qualcomm, Estée Lauder, Nike, Dupont, Dow, Tyson Foods, Baxter International, General Motors, CXX Corporation, Suncor, Bank of America, Corning, and Barrick Gold. Of these 20, there are 4 of them we're going to highlight here. DuPont, Tyson Foods, Bank of America, and Barrick Gold. You'll notice all of these have weekly option frequencies and they're all going ex-dividend this week. And I highlighted these 4 because they are unique opportunities and the fact that their price per share is not too high. You'd need $7,000 here for DuPont, $5,400 for Tyson, $3,300 or $3,400 approximately for Bank of America, and only $1,450 for Barrick Gold. By the way, access to this spreadsheet and the monthly dividend stock spreadsheet and all the spreadsheets I use on the channel and access to my own income strategies are available by joining the Average Joe Investor Patreon community. If you want to learn more about joining, check out the link down in the description below. All right, first off, we've got Tyson Foods, ticker symbol TSN. Currently priced at the time I looked at this review at $54.05 per share. Here's the screenshot from Fidelity. This is going to tell us our dividend information and our price information. This is a screenshot from the Dividend Capture Income Calculator, which is a tool you have access to by joining the Patreon community. And then we have the option chain down here for Tyson Foods right here. So here's the situation. Tyson Foods goes ex-dividend on the 29th, and the dividend you'd be eligible for is 49 cents per share, or $49 if you owned 100 shares. Here's the option chain down here. So if we're priced at $54.06, and we know that price fluctuates, so this might not be the price you're looking at right now, but at $54.06, you've got a few different options. You can go at the money right here, which limits the amount of capital appreciation you would generate, if any, but you get the most income. You could go out of the money at, say, 55 right here, which makes it more likely that you'll generate some capital appreciation if you get assigned on your shares, but you get much less option income here. You could also go in the money and give yourself a little bit of downside protection right here at the $53 strike price. You get more option income, which is partially offsetting to the amount you're going underneath the current price per share. In this situation, I felt the most appropriate would be to go at the money at $54, which is just slightly in the money. So when I say sell a covered call at the $54 strike price, what this means is you are committed to selling your shares for $54 per share, all 100 of them, if the price of Tyson Foods is at or above 54 at the expiration. Now there's an additional moving part here, which is when you sell this option, the holder of the option contract you sold may decide that they want to take assignment and collect that dividend, which means if if the price of Tyson Foods is above 54 prior to the ex-dividend date, then they're going to take assignment on these shares early. Now, a few different scenarios could play out here. The price of TSN could drop below the current price, right? That's very possible. In that situation, you can always decide to sell your shares because your break even is $53.10 in this scenario. We've got all of our data inputs here. 54.09 is the current price at the time I took the screenshot. 49-cent dividend, ex-dividend is 2.29, strike price 54, and the option expiration is March 1st. With a premium of $50. So under this scenario, you could always sell your shares for $53 after option expiration. Ideally, we would get assigned at our expiration right here, meaning that the price of TSN is above 54 and you don't get early assignment prior to the option expiration. In that scenario, you'd collect a total of $90 from this trade. 50 from the option income, 49 for dividend, and you'd lose 9 on capital appreciation because our strike price is below the market price. And you held this trade for 4 days in this scenario, which would be a return on capital of 1.66%. annualized, and this annualization is correct now because it assumes anything less than 7 days would be done per week or every 7 days. Assuming you could do this type of trade once a week for 52 weeks, then the annual return in this scenario would be 86.76%. Now, hypothetically, you could get early assignment, meaning that the option holder takes assignment of the shares and collects the dividend, in which case you still collect $50 on the option income, no dividend, and a slight loss on the capital appreciation. So your income in this situation would be $41 as opposed to $90 in just 3 days. So it's a return on capital of only 0.76%, but annualized would be 92.22%. So that's Tyson Foods. We don't know, we don't have a crystal ball, we don't know what's gonna happen in the future, but in the situation where Tyson Foods stays about flat or goes up, you're going to make approximately $90 in cash flow from the amount invested, $54.09. Next up, let's take a look here at Dupont de Nemours. So in this situation, we've got a price per share of $70.14 per share, goes ex-dividend on February 28th, and the dividend amount is 38 cents. So let's go down here to our option chain here. With the $70.14 per share, we could go in the money at 69, or at the money at 70, or slightly out of the money at 71. So in this situation, we're gonna try to maximize our cash flow. So we're gonna go at $70 even right here, which would collect about $45 to $55. So here's our screenshot for our dividend capture income calculator. We included all of the details here. Again, we could always sell for a break even after our option expires at $69.28 if the price happens to drop. We always have that option. But let's assume we get assigned at expiration, meaning that the price is at or above 70 on March 1st when trading expires. And in that situation, if we didn't have early assignment occur, we would collect a total of $72, 50 from the option, 38 from the dividend, and a slight loss on the capital appreciation for 72, which would be a return on capital of 1.03%. Annualized, if we could do that every week, we'd collect 53.51%. In this situation, if we were to potentially get early assignment when we lose our shares before the dividend, the ex-dividend date, we'd still collect $34 in cash flow, which is still positive, right? We're not losing money. And that would be a return on capital of 0.48% in 2 days, or 88% annualized. Third trade here, let's go to Bank of America. So Bank of America is currently trading at around $33.70 per share, and they go ex-dividend on the 29th for a dividend of 24 cents. Let's go to the option chain down here. So we can go at $33.50, which is slightly in the money. It's definitely a possibility there, especially if you're concerned about Bank of America's price going down in the next 3 to 5 days. Or we could go slightly out of the money at $34. In this situation, let's look at an out of the money strike of $34, which will collect between $17 and $18. We've got all of our details built in here. Our break-even price in this situation is $33.30 per share if we sell it after March 1st. In this situation, if we get assigned at expiration at our strike price, our total cash flow would be $70 off an initial investment of only $33.71, which is a 2.08% return on capital in just 4 days. If you could do that every week or every 7 days, that'd be an annualized yield of 108%. However, if for some reason we have early assignment occur and those shares get called away from us prior to the ex-dividend date, we still collect 46 in 3 days for a return on capital of 1.36%, annualized 166%. And then lastly, let's take a look at gold, which is Barrick Gold, ticker symbol GOLD. In this situation, we're priced at $14.58, and they go ex-dividend right here on the 28th for a dividend of 10 cents per share. Now here's the option chain for Barrick Gold, which is a weekly option chain. Let's go right here at the money, $14.50, as opposed to out of the money at $15 for the strike price. At a $14.50 strike price, we'd have collect between $19 and $22 on that option contract. Coming back up here, we've got all of our details filled in here. In this situation, we can always decide if for some reason we don't get assigned, meaning that the price is at or below $14.50, we can always sell for $14.27 and break even. But let's assume that the price is at or above $14.50 at the end of trading on March the 1st. In that situation, and we still hold the shares we weren't early assigned, we'd collect $23 off an initial investment of $14.57, which is a 1.58% return in just 4 days. And if you could do that every week, it'd be 82.31% annualized. But let's assume we get assigned early. So instead of $23 in that situation, on the 27th, which is tomorrow, and in that scenario, we'd collect no dividend, $20 in option income, and we'd lose $7 on capital appreciation since we're just slightly in the money on our strike price for a total of $13 in just 2 days. So with these 4 dividend stocks here, we have opportunities to collect cash flow in short-term trades. We don't have a crystal ball. We don't know what's going to happen in the future. These stocks could tank, in which case you have to be okay with holding them long-term or just deciding to sell them no matter what, and then just to take a loss and then move on to the next dividend stock. These are not opportunities to hold stocks long-term. I'm not advocating for these stocks as being great dividend stocks to hold long-term. We're talking about short-term income plays, which are ideally only a fit for investors that are looking for cash flow right now, as opposed to building a long-term portfolio for the future. This dividend stock spreadsheet that we're looking at in this video and the corresponding dividend stock portfolio spreadsheet are available by joining the Average Joe Investor Patreon community. If you want to learn more, check out the link down in the description below. Hopefully you found some value in this video, guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.